Well, it's noon here on Tuesday, January 10th in downtown Bethesda, Maryland, and this is news that you can use from YAA with your hosts, Zach and Ray. How are you today, handsome?
I am doing well, Pops. How are you doing today?
Apparently, I'm losing my voice.
Some things don't change when we do this show, and you being phlegmy is one of them, Pops. Let's kick things off. Let's jump right into it. Headlines like this today, Dad. Manheim Price Index posts largest year-over-year decline in history. Now, I'm not as bad as some of those other headline writers out there. It was Forbes, if I'm not mistaken. Forbes used car. I know I spelled Forbes wrong.
You
Bear
did.
with me.
Yeah.
Used car prices post biggest drop on record.
Yeah.
Not really, because the Manheim Price Index tracks wholesale value. Whatever. I'm not going to be a nitpicker. But, Dad, we have historic levels of wholesale used car declines, 15% year over year for the month of December. And at the same time, in the same breath, we need to acknowledge this sentence.
Yes.
Which reads, while that decline was the largest in the series history, compare that drop to the overall 88% increase in the 21 months from April 2020 to January 2022. So, Dad, we have these headlines, rightfully so. I mean,
Yes.
Today's stream is titled Used Car Prices Crash at Historic Levels, and that is not inaccurate. They also went up at historic levels 88% during that period of time. And different data sources say different things. Black Book data showed that they were up, 55%. So we are seeing, though, the push towards normalization.
Whatever that new normal is. Yes, used car wholesale prices have declined at a somewhat rapid pace, whether you're looking at Manheim's data or you're looking at Black Book's data. Black Book put it at 22.9% for last year, decline in wholesale values. But we also know that retail asking prices have not declined anywhere near the same rate as the wholesale values. Retail values, according to Black Book, have declined about 9%, 8.5%, 9% for 2022. And when you consider that, I don't know, the values were up, according to Manheim, 88%, a 15% decline means, well, it's still 73% higher than it had been or than it should be. But do I ever think we'll get back to those pre-COVID pricing levels? Probably not.
Yeah, no, I think that kind of goes without saying. The expectation that these values ever go back. I mean, again, we can look at this visualization of the 15 years worth of Manheim data here from 1997 to today. No, that's 25 years.
Man, with that, yeah.
Wait, that's 27 years. Whatever, it's 26 years. You can see that we are at historic peaks.
Yes.
Coming down, but still, we're never going to go back to this.
You can see the crash in 2008, 2009.
Yeah, let's put that into perspective here. The crash of 2008, 2009, it was, you guys can't see this, but I'm going to put it was one Zach index finger.
Yeah.
The crash of 2022 was like 3 Zach fingers.
Yes.
Okay, so we've already seen a bigger crash.
But the build up in pricing from 2009 until COVID days, it was just astronomical. And then once dealerships reopened after the pandemic, well, then the increases were staggering. And I believe, as we said at that time, that these type of increases aren't sustainable. And that's why you're seeing, declines of 15 to 23%, 22% in wholesale values. We will continue to see declines in retail values and wholesale values probably throughout all of 2023.
Let's look at the Black Book data really quick, Dad, because Black Book says that the overall market for the same period of time as Manheim went down 22.9%.
Yes.
That's an 8-point swing, if I'm not mistaken, 14.9 to 22.9. Go ahead.
Well, one of the things we have to take into consideration is Manheim only uses the information from
Manheim Auctions.
From Manheim Auctions and their Cox-controlled sources for their report, and Black Book is able to gather about 95% of all transactions both at Manheim and others.
Yep.
And I would have to believe that Black Book's data, because it includes more information, is probably a tad bit more accurate.
So they have us down 22.9%. Vans actually last year were the only segment that ended the year appreciating, up 3.2%. And again, folks, to just put this into context, in 2021, Vans appreciated 42.7%. So the numbers are slightly smaller in terms of total appreciation. Again, the Manheim data had it at 88% increase over 21 months. Here, if we were to add this up at Black Book over 24 months, they say Vans, for example, appreciated 45%. Directionally, everything's still the same. You are starting to see prices come back down and normalize, again, down 22.9%. And we can look at, you mentioned this a moment ago, I'm going to scroll down. We're not going to look at all the segments. Let's look at the purple line. Let's look at the green line. The purple line represents 2021.
Yes.
And this is wholesale 2 to 6 year old used car prices. Beginning of the year, everyone starts over here.
Yes.
Wholesale used car prices in 2021 were up over 50%. They ended 2022 right above our heads here. The green line, they ended down about 13%, 13 to 15%. So we went up 50%. We went down, let's call it 15%. You still have a lot more to fall.
Yes.
And then if you look at retail, that's the same story.
And the anticipation is that those drops will continue throughout 2023.
Yeah, absolutely.
Yeah.
If they don't, I would be very surprised.
Well, there's just so many outside pressures that will impact what goes on in both the new and used car markets. But primarily, affordability is one of the factors. And the second factor is that because of affordability, there's fewer and fewer people actually in the market. Rising interest rates are the main factor of impacting affordability. So there's nothing that indicates that it's going to get, that the market's going to go and boom. It's kind of going to be bust a little bit this year.
And we also had, Dad, we talked about a bit yesterday on the show, the rental fleets, more new car supply. And we've got this comment here from Steven. CD, Chrysler, Dodge, Jeep, Ram, CDJR dealerships are hemorrhaging Ram and Grand Cherokee models right now, offering $6,000 to $9,000 incentives for leases with super low money factors. So as you see,
yes,
new car inventory continue to come back. That'll also put downward pressure on used car prices. Wholesale, this is from Chad. Chad, thanks for being a part of the community. Wholesale supply is still low, but demand is down. Like Ray said, affordability is key. Eventually, these cars are going to have to come back into a price range where folks can finance them.
Yes,
and it makes sense.
And we're also seeing on top of all this that banks are tightening their lending criteria. So it's not as easy for people to get the loans that they want. And with vehicle pricing as high as it is, the loans that they can get are just not affordable loans. So yes, dealers will be forced, if they want to sell cars, forced to lower the prices on the cars that they overpaid for when they bought them. They can hold on to them as long as they want, or until their bank says, we need to see some money.
Yeah.
If the dealership's used car inventory is not floor plan, then the dealer can hold on to it forever. It doesn't matter. It's just that's his cash tied up in those cars. But if they're paying interest on it, if the way they bought their inventory is because they floor planned it through their bank loans, the cost of doing that is going up. The value of the collateral is going down. And so the banks are going to want to make some type of adjustment so that the value of the collateral can be closer to what is still left on the loan balances, even for auto dealers.
All right, so you're talking about banks. I love talking about finance. So, Dad, auto credit availability tightened again in December, and it tightened not only for consumers but also for dealers, like you're alluding to. So we have this chart shows the Dealertrack Credit Availability Index. Credit availability is down to one of its lowest points.
Yes.
I mean, obviously when COVID started, it was down significantly, but I mean, we are down back below 100 on this index, and we've previously been up well over 105. Now, what does this mean, Dad? Most credit availability factors moved against consumers in December as yield spreads widened. The subprime share declined. term shortened, and the share of loans with negative equity declined and down payments increased. The average yield spread on auto loans widened, so rates consumers saw on auto loans were less attractive in December relative to bond yields. The average auto loan rate increased 7 basis points in December compared to November, while the U.S. Treasury went up 27 basis points.
I just have a question for you. How many people financing their cars are really interested about their making their car loans are less attractive than relative bond yields?
No, but I think you have to think about the people who are lending out the money.
Oh yeah.
This is like a bit of a forward indicator that the banks are going to continue to raise their rates because the rate that it costs them to hold on to that money is going up.
Yes.
So they're going to pass that along.
Yeah, but the consumer doesn't care. All they care about is what's my interest rate and what's my payment.
And this is an indicator to those consumers that your interest rate
is going to go up.
Exactly. If you haven't gotten that pre-qualification, you're going to buy a car in the next 30 days, you should. Because February 1 is going to roll around and the APR on that auto loan is going to go up. And it's happening across all lender types, Dad. Credit access tightened across all lender types in December, with credit unions tightening the most. On a year-over-year basis, credit access was tighter across all lender types except auto-focused finance companies. Over the last year, credit unions have tightened the most, so their willingness to approve folks. And we've seen this. I've seen it come up in our approvals as well through our credit union partners. I think we were with one of our partners. It was only like 30% of people that applied actually got approved.
Wow.
Yeah. So they're tightening. They want to lend money to people who they feel confident that are actually going to bring that, bring that to fruition.
Yeah. Well, what's wrong with that thinking when you're lending the money?
Yeah, I completely agree.
Yeah.
All right, Dad, we've got a question from Injinkia. Is there a way for us to know if a car is floor planned versus paid for by the dealer? I don't think so.
No, there wouldn't be any way for you to know.
Yeah, I don't think so. Justin wants to know if he thinks we'll get back to normal prices by the end of this year.
Well, it depends what you consider to be normal. If you're thinking normal is what pre-COVID pricing was, probably not. I think what we're going to look at in the future is a new normal. Will the prices and values be closer to what historical norms have been in the past? Yes, I think they will be, but they won't be what they had been exactly.
Yeah,
if that makes any sense.
Yeah, and Susanna's hitting the nail on the head. What is normal?
Well, I'm
being redefined.
Not. Yes, I'm certainly not. So.
It's being redefined.
Yes.
That's absolutely sure. All right, Pops, let's turn our attention here. We've got some news. We're not going to be seeing as many Super Bowl commercials from our friends over at CarMax, Carvana, and Vroom. A headline story over on Automotive News. I didn't even read it, but I get a sense I understand why. So it doesn't pay to spend millions on a Super Bowl commercial.
Well, what's amazing is if you read the article a little bit and you look at quarterly ad spends for like CarMax and Carvana and Vroom.
Yep.
CarMax's advertising spending was the last 3 months ending November 30th was what, $58.7 million.
Down 23%.
Okay. Carvana, who's in deep doo-doo, cash flow wise, well, they only spent $117 million, more than double what CarMax spends, and they sell less than half of what CarMax sells.
Growth company, baby.
Yeah.
7% down from a year ago. And Vroom, Dad, their ad spend down 58%. So they're making some pragmatic decisions here, right?
Well, first of all, if cash is tight, if you know the market's tight, do you really want to spend $7 million for a 30-second commercial? And, when you hear $7 million for 30 seconds, well, that's just the time. That's just the cost of the time. That doesn't include the cost of production of the ad. Okay. So let's say it costs you $500,000 to produce it. It's $7.5 to $8 million to have an ad run for 30 seconds on the Super Bowl to advertise cars in a declining market. Yeah, I want to jump on that bandwagon.
Yeah, definitely not.
Yeah.
And it's interesting. I continue to get every single day price drop emails from Carvana. We've been tracking this. For example, this Acura MDX, it was $20,590. Drum roll, please. It is now $19,990. It's just going to continue. We're going to continue to see their cash crunch.
And even at that price, extremely overpriced
Should we
for what
demonstrate?
it is.
Yeah, let's demonstrate.
A 2012, was that an MDX? Or
Yeah, it's a 2012 MDX with 71,874 miles. And let's show everyone how we think about what a fair price is for a vehicle like this. I need the VIN.
There it is.
So what I'm going to do is I'm going to go to joinyaa.com.
I've heard of that place.
Yes, you have.
Yeah.
And then I'm going to log into my account once it loads. I guess I could have just gone directly to the app. But I'm logging into my account. I want to see what the Black Book trade-in value is for this vehicle. Again, we partner with Black Book.
It was 71,000 miles. Yeah. Oh, that would really cut the value from 718,000 miles.
Yeah, it really would. It'd probably break Black Book.
Yeah.
Where is this vehicle? Free pickup from a car vending machine.
Okay, great. Free delivery to Washington, D.C. So,
all right. Oh, it's in Gaithersburg,
okay.
Gaithersburg, Maryland. All right, great. So we're going to choose Maryland over here. All right. Any guesses before I hit? So this is a price drop.
Yeah.
A price drop from Carvana. They originally had this. Actually, this may have been the one I was tracking back when it was $10,000 more, but it was $20,590. They took $600 off. We're at $19,900. It's a 2012 Acura MDX with 71,874 miles. Guesses in the chat, pretty please, what we think the Black Book median retail value is going to be. Not trade-in, not private party, but retail value. What do you think it's going to be, Pops?
I think it's going to be about 15,500 to
15,500. That's what Bonsai thinks, or Bonsai.
Yeah.
We got 16,000. We got 12,500. Let's see. I'm thinking you're 16,200, 14,000. All right, let's see.
I'm thinking wholesale on it is probably about 12 grand.
Wholesale, and we're saying median retail is we're all ending up somewhere around 16,500. Okay, we've got 9,999. I don't think so. All right, I'm gonna go 15.
Okay.
5.
I said
15,500
to 16. Yeah.
All right, let's see median retail. Let's all do this math together. Give me a second. We're going to add the two numbers together. And we're going to divide by 2, because that's how you get an average. We're going to put them in parentheses. 16,775. $16,775. So their price is still $3,000 high.
Yes.
Wow.
Yes. And what did I say trading was? 12,500.
Yeah, you said trading was going to be around 12,500. Damn. He might have done this for a while.
Might have. Been a while.
We had a comment come in here from Mike saying another clickbait title. Cute dog, Mike. Are we actually seeing crashing prices? Yeah, Mike, we actually are. We 100% are. We referenced it at the beginning. It's year over year. The title from Manheim is the largest historic price drop year over year ever in history.
Yeah.
Prices are still way too high.
Yes. I mean, so as much as we'd like to make that a clickbait title, in this case, it's really not. Now, maybe if Zach put in there biggest drop in wholesale car values since, I don't know, the Flintstones, then that might have been hyperbolic. But in this
27 years of Manheim data, and they're the ones coming out and saying it, Yeah. And then again, we can even, we're kind of poking fun with the Super Bowl ads, but the reason those companies are stopping spending so much money on advertising is because they're seeing the market change right in front of them.
Yes.
We're seeing inventories push things down. So, yeah.
No, no, this was not one of your clickbaity titles.
Thank you. I appreciate it.
You're welcome.
All right, Dad, you put a few other things that I thought were interesting in our show topics we have here, Dad.
Yes.
Love getting your take on EV. Number of U.S. charging stations must quadruple through 2025. In 2025, 7.8 million EVs could be in operation in the U.S., according to S&P Global Mobility. So we've talked about before on this show, the need for infrastructure to support the EV push is desperately there.
Well, what I found interesting in that is they say it has to quadruple between now and the end of 2025. That's 3 years. Okay. I don't see how that's possible.
Yep.
In such a short period of time. And I understand that EV sales, as a percentage of overall sales is increasing dramatically.
Yep. Every quarter. Yeah.
But we're still, at a certain point, if the charging station situations don't get resolved, then that growth will slow down for the amount of EVs being sold because, well, there's just no place for people to charge them.
Completely agree.
Yeah,
And the prices are super high. Yeah, it continues to be an interesting.
Well, and the real issue is that at so many of these charging stations, the number of chargers that don't work.
Oh my gosh, yeah.
It's a relatively high percentage.
Shout out to Kyle from Out of Spec Motoring. He's doing a great job over on. He's here on YouTube. He's on LinkedIn. He's on Twitter. He's everywhere, documenting how challenging it is to find chargers that actually work. So yeah, it's another factor in all this. Let's actually though, Dad, let's switch gears.
Okay.
Let's jump into it because I didn't want either of those two topics. They could have been really gotta be kidding me, but we got two good ones.
Yes. We do. Really? You gotta be kidding me.
All right, Pops, here's the deal.
Yeah.
We're gonna start with this one, the one I did not prep you for.
The one you haven't shared with me at all.
All right, we've got INRIX 2022 Global Traffic Scorecard. London tops list as most congested city. U.S. cities inch closer before.
Inch closer to what?
The record.
Oh, okay.
I want your guesses. London is the top city. How much time? Don't look at the screen.
Okay.
How much time do you think the average driver lost in the year sitting in traffic in London? They got number one.
In the year?
In the year. And I want
Sitting
guesses
in
from the
traffic
community. Yep.
In the year.
Yep.
So let's say they sit in traffic 3 hours a day, and let's say so what's 3 times the 9,000 hours?
You think they lost 9,000 hours?
900 hours?
You're about to make me do really, you got to be kidding me on you at 9,000 hours.
900 hours?
The top 5 most congested cities in the world: London, 156 hours lost. Chicago, 155 hours sitting in traffic. Paris.
That's BS. I'm gonna say it right now, and here's why I'm gonna say it's BS. I used to drive from Arnold, Maryland, to Towson.
Yep.
Okay. Every day.
Yep.
Okay. And every day I would get stuck in the same traffic congestion on the Beltway.
Yep.
Every day.
Yep.
There was at least 45 minutes every day just going to work.
Yeah.
I was stuck in traffic. Okay. If I was done with my workday at 5 o'clock and I wanted to leave, well, then I was guaranteed another 45 minutes being stuck in traffic coming home.
Yep.
That's 2.5 hours.
I hate to break it to you though, Dad. Al's on it. There's only, and he has a typo, 8,736 hours in a year.
Okay, but 3 hours a day.
I know, but your first guess was 9,000.
I did the math wrong. But 3 hours a day, what's 3 times? There's 30. So let's say you're driving 25 days a month to go to work. That's 3 times 25, 75 times 12. That's a hell of a lot more than 156.
All right, the other one we got for you.
I mean, I proved at the start that I'm not real good at math, but I'm pretty sure 12 times 75 is a hell of a lot more. I mean, 2 times 75 got you right there.
There you go.
Yeah.
They do take long holidays over in Europe. Rolls-Royce CEO.
Yes.
Really, you gotta be kidding me. Customers became even younger last year. Now, Dad, if I'm not mistaken, Rolls-Royce owned by BMW. BMW also owns Mini. Mini is their brand that, young people should be able to have access to. If I'm not mistaken, Dad,
okay, yes.
The average age of a Rolls-Royce customer is younger than that of a Mini customer. How could that be?
I can explain that one to you.
Yeah.
On my first day when I started at Mini of Baltimore County.
Yep.
In Owings Mills.
Yep.
There was like this older woman standing with her older husband, standing by a convertible on the showroom floor. And I walked by and I said to her, if you keep looking at that, you're going to have to take it home.
Yep.
And her husband said, don't tempt her. And of course she took it home.
Yeah.
She was 83 years old. What I didn't realize is she was like the average age of our customers at first. I mean, Mini skews much, much older than you would think. And the reason for that is because it's us old folks that buy those things because we're trying to recapture our youth.
Wow.
Okay. This was an 83-year-old woman. Couldn't wait to be driving around in her convertible like a kid again.
Yeah.
Okay. And And today's young people who have money say to themselves, "Why wouldn't I want to be driving a Rolls Royce?" Well, I could think of a couple 100,000 or 400 or 500,000 reasons why.
Yeah, we do have the clients themselves became even younger last year. This comes from
Yeah.
Rolls Royce. We are now on an average age of 42. We are even younger than a brand like Mini, for instance. Yeah, so I hear you out there, but
Yeah.
it's also
It's
the haves and have-nots and those
oh
who can
my
afford
God,
it's insane.
yeah. You know, I wonder just out of curiosity if that shift supervisor at McDonald's that was making $10.25 an hour, you know, if they could have embellished his income enough to get him to qualify for one of them
referencing video we had over on the YAA channel. If you didn't see it, let's wrap today's show up, Pops, with what is on your wrist. And this is this website.
The new segment.
This website is a little too much for me.
Well,
going
just
on.
hit order today.
Okay, all right, just hit order today,
and that'll take you to the watch.
There you go. What's on your wrist, Dad?
This is what's on my wrist. This is a Panzera. Panzera is an Australian company. Okay, the watches are assembled in Australia. I don't want you to think that they're using all Australian goods, because I don't know the real operation in the watch is Japanese.
Okay, there you
go. It's a Miyota timepiece that they use, but it's a great looking watch, I think. And they make, this is my second Panzera watch, but I just love the look at it, with the look of it, with the black dial with the yellow contrast, and then the rubberized band with the yellow contrasting stitch.
Now, question for you: did you pay list price?
No, I got it at 50% off.
There you go, folks. I just want to prove through these watch segments that you will never pay list price for anything.
I am, you know, I kept seeing ads, and when they said, "Hey, pre-order at 50% off," bingo. Now, I waited several months to get the watch that I pre-ordered at 50% off. But yeah, I think I paid $285 or something like that.
If it's taxable, it's negotiable.
Well, I didn't even negotiate. I just took advantage of their 50% off coupon code. You know, kind of like what people do when you run those.
Absolutely. Yeah. Every once in a while we do run promotions. All right, Pops, let's go to show.
Yeah.
Again, used car prices are crashing at historic levels.
Oh, wait, can I just say one thing to Chad?
Yeah, go for it.
You know, I had any number of Tourneaus from when we were Precision Team dealers. They would always give you a Tourneau watch.
Really?
I think one of them I gave to your brother-in-law, Zach. And yeah, I had, and I think I traded a couple of the others that I had. But yeah, absolutely. I had a number of Tourneau watches that I had gotten because we were a Precision Team dealer at Acura North Scottsdale.
Jim enjoys the watch segments, and they will be novel, Jim, for about what? You got about 40 watches. So for the next 40 days, this will be a segment you enjoy, and after that, it'll just be reruns.
Well, I'm gonna have to buy more watches.
Any Richard Mule? No. We don't got money like that.
No. I have.
I got some knockoffs. Yeah.
I have a Siga design that people keep mistaking for a Millie, but it's not.
Yeah. No way.
No.
All right, folks. We will be back tomorrow. What time, Pops?
Noon Eastern, 9 Pacific, with I believe more news that you can use, and well, another watch from the collection.
See you guys then. Thanks, Pops.
Thanks, everybody. We'll see you.